How long does it take, do you reckon, in your personal opinion, before somebody can stop holding hands with a broker, a financial advisor, anyone, before they can start going offline?
I mean, it's almost how long's a piece of string. In the one sense, immediately buy Satrix 40. Yeah, just go the Satrix 40 route, put your money in every month. When you get lump sums, put your lump sums in over a couple of months like that, and kind of fire and forget. Give it time. Again, it comes back to minimum 3 to 5 years. The more time you give it, the better it is. So in the one sense, we can do it really short. In the other extreme, some people are never going to get there. But to the average person out there, I think we need to say that it's going to be a process that's going to take a couple of years. And might be 1, it might be 3. It's not going to happen in a hurry. And for most people, it's more likely to be 2 or 3 years. And the big step is that initially, when you're wanting to break away, you're going to do it a little more cautiously. It's like, okay, we're not going to hold hands, but I'm going to phone you every second day. And then I'll phone you once a week. And it's a kind of slow, gradual breakup, which I think is not a bad idea in a sense. There's a lot to learn out there. None of it's rocket science, but there's a lot to learn. There's a lot of things you've got to understand, things you've got to look at and understand what you're looking at.
Okay, right. Now, let's say that tomorrow I decide I've got enough knowledge and enough courage to go, I'm not going to hold hands anymore. I'm going to do my own online share trading. What do I need to read? Yeah, I mean, I go onto my online share trading site where I've got piffling little rands sitting there, and I'm trying to play around and see what happens. And there are all sorts of sends, notes, and or should I be reading that sort of stuff, or is it just going to boggle my brain and make me totally confused?
It might boggle your brain. I mean, short answer to what should you read is probably less than one thinks one does. You know, do we need to read every business paper out there cover to cover? Do we need to watch CNBC 24 hours a day, 7 days a week?
Yes.
CNBC, absolutely, yes. But the other ones, definitely not. I think less. I think we've got to be careful. We don't completely overwhelm ourselves. And what happens in this day, you know, when I started this game in the 80s, there was no access to information. Now we've got, you know, an overwhelming, I call it analysis paralysis. We can go down a rabbit hole and we never come back up. And I think what we need to do is get yourself a piece of paper and get a couple of things that are important. What's important? Cash flow. Is the company generating cash? And has that been growing? Have profits been growing? Find a couple of issues that are important to you and use that as your preponderance of evidence. Take that piece of paper. When you're doing your homework, go find what fits in. What to read? Well, now you're interested in a company. Let's say Shoprite. Shoprite fires off a sense. Do you need to read it? Short answer, yes. You need to get a broad understanding. Do you need to read the core sense? Well, no. You could go to one of the many websites out there and find the analyst who's talking about it or something. You've bought a business. If you bought a pizza parlor down the road, you wouldn't just completely abandon it. Every couple of months you would go past and order a pizza. Sometimes you would send your friends anonymously. You need to be in contact to some degree, but I don't think it's the level of contact and the level of engagement that people think we need to make.
It actually raises a question and something that maybe we should be looking at on the show, and I don't know if I can look at it in the very near future because my brain will probably fry, but maybe, and you can give me some feedback on email about this, maybe what we should be looking at doing is getting somebody into the studio who can take us through a balance sheet, a company balance sheet, and explain what the different elements are and what you should maybe look out for, because we see them printed in all the business papers.
Yeah.
And what we do is we just turn the page.
Well, they're daunting. In a sense, announcement can be, I mean, I've seen some of the 30 or 40 pages. Now, and that is brain-numbing for anybody to read. For an individual who's doing this as a part-time environment, you know, for their own account, a DIY investor, it's more than, it's going to cause a rupture in the brain. Point is, there's some important information there. So what is it that you need to find from those multiple pages, and then how do you understand it? And that's the trick. It's not all 40 pages. You end up with, you know, half a page. A précis. Yeah. Nice and easy. Summary there. Got it down.
I want to come back to online share trading in just a moment, but there's an email in from Marku Landman. I have savings of £20,000 sterling in the UK for my children's education. I hope you've declared that to the receiver, otherwise you're going to get a phone call tomorrow. I want to invest these funds for the next 15 years without touching them. I'm thinking of investing all of it in a global emerging markets fund. Is this wise, or should I invest 50% in emerging markets and the other 50 in large global blue chip stocks?
I would say the latter, and I tell you why. Putting it all into emerging markets, 15 years, great long period of time, nice investment horizon. I say to folks, 20 is ideal. 15 is pretty close enough to say it's good enough. 15 years is great, but the truth is he's talking about his daughter's education here. So what happens if year 14 everything goes horribly wrong? Also, suddenly she's not getting educated. This is not a case of your retirement is going to be box wine or Corp. This is a case of your daughter gets educated or not. So you want to pull some of that risk back, and that means a slightly lower reward, I appreciate. So I would say that 50-50. Your blue chip funds is never going to shoot the lights out, but over 15 years, they're going to do very, very well for you. They're going to be your base in a sense. That extra emerging market fund will be, well, when you send her, do you send her with a 15-year-old clapped-out Beetle, or maybe you've bought her a new, whatever the hip car is type of scenario. So you're guaranteeing the education, but you're now saying, depending on how it does, will depend on exactly how it goes and the like.
But you've also got to be very careful with the offshore funds as well, because out of interest, before the show, I was looking around at some of the offshore funds. The amount of them, once you start digging deep into them and you find out where they're investing their money, 60% of it's going to emerging markets.
Yes.
So you sort of, they're investing back here, and you think you're taking your money offshore to be invested there.
And they're just buying stuff on the JSE.
They're just buying stuff on the JSE. So you've got to be really careful about that as well.
You have to drill in. And I mean, there are a couple of points. Obviously, one can never do something without homework, particularly something as big as your child's education. And you've got to go and see, firstly, what are the fees you're going to be charged? I mean, how big, and don't look at a 2.5% upfront fee and say it's not bad. Take that 2.5% and compound it out of the next 15 years, and it becomes massively significant. That's why ETFs are great, really low cost. So what is upfront fees? What are annual fees? Are there performance fees? What are they? What is their definition of a large blue chip? I mean, does it include some little country you've never heard of? Or is it blue chips as per your definition? This information should be easily available on the company's website. And if it isn't, top tip, flee. Find a company where it is. So you've got to go do some digging. And what countries are they investing in? What is their mandate? What are they, splitting between? What has their performance been? And tell me the performance for the last 3 months. I want minimum 5 years performance review. And that means a lot of funds haven't been around. Well, sorry guys, I need you to mature and prove your case first.
Let's come back to the online share trading. Marco, I hope that answers your question. What sort of costs are you looking at there? Is that the cheapest method of trading shares online?
It's going to depend, and unfortunately, it depends.
He's fighting for his job here now. He's fighting for his job at this stage.
No, it depends how much money you got. Because if you put it into exchange-traded funds, what happens with the exchange-traded fund? It'll be if you go direct to Satrix or Nedbank or ETFSA or something, you pay a upfront fee, which will be minute, but then there's an annual management fee that can start to hurt. If you've got R1 million, that annual management fee can be measured in tens of thousands. That starts to hurt.
Wow. Okay.
Whereas if you've got a small amount, it's absolutely going to be better to go direct. So it's going to depend on that level. And again, go to the different websites, get the numbers, and crunch the math. Your online share trading environment is going to be a monthly fee, which is going to work out, depending who it is, somewhere between 400 and 800 Rand per year, and that will entitle you to the research, to the ability to transact, etc., etc.
And then you get charged for
when you do the transaction, you're now going to get charged as well. And there is, and again, different brokers have got different scales. At 10,000, that's the cheapest broker. At 30,000, it's that broker. So again, how big are your transactions going to be? And what are they giving you for the monthly fee or annual fee that you're paying?
But now, technically, Simon, if we're talking about people like me, man on the street, we shouldn't, if we're online share trading, we shouldn't be, because we're not buying 1,000 BATs here, sell them tomorrow to make 3% and buy this. And we should be buying with a view to developing an arsenal of equity.
And in truth, you exactly want to be building a portfolio, which is going to take time. There are a few people out there who can, open an online share trading account, drop in enough money, and tomorrow have a portfolio. It's something we're going to build slowly over time, 5 years, 10 years, 20 years maybe, depending on circumstances and the like. And then again, it comes back to what are those fees? Because initially, if you've only got 1,000 Rand and you're being charged 600-800 Rand annual fee to have that account, the numbers just simply don't add up. At 10,000, you've been charged 6 or 8%. That's still quite hefty. Now you can argue, well, at least you're in. You've got to get some skin in the game in a sense. Yes, but the fees are critical, and the big issue is I think people ignore them. And it comes to the point I want to make, which is there's no minimum transaction size. You can buy one share, and there's a 1 cent share in the market. One share, 1 cent, but you're going to pay about 80 Rand in fees. You need to do at least 5,000 Rand. In truth, economics of scale starts to kick in at 10,000 Rand per transaction. Your cheaper brokers at 10,000 Rand, you're paying just under 1% for that transaction. And it comes back. Get in that Excel spreadsheet and take 1% versus 2%. That extra 1%, as you say, it's only $100. Sure, compound that and see what it's worth in 20 years' time, growing at 18%, which is average return on the JSE. That $100 is suddenly, look, it's not going to be a Mercedes, but it's going to be money in your future.
Yeah. Simon, thank you very much for your time. It's been great talking to you. Last question. Push the envelope. If there's one share right now, I give you 100,000 Rand, and I say to you, buy one share.
One share.
One share.
100,000. 5-year view. Famous brands.
Good call. Should we go out and have something to eat? Simon Brown from Standard Online Share Trading. Thank you very much for joining us.